Welcome back to my channel. In this video, I'm going to be covering one of my favorite companies, which is Alphabet Google. This is a great company that really built their business on their search capabilities and really becoming the number one search around the world. And that made them a fairly powerful company that makes a lot of money by selling to advertisers. It really is profitable and generates a lot of free cash. They didn't stop there. They continued on and bought YouTube a number of years ago. And now YouTube has become one of the biggest video streaming platforms on earth. It keeps growing just really organically. And YouTube is really profitable for Alphabet. It generates good profit, good cash flows. And they didn't stop there. They started a cloud business for cloud infrastructure. And that business is growing in the high 20 percentile percentage. And that business is thriving. It's really growing well and really taking good market share away from the leaders over at Amazon and at Microsoft. This is going to be an AI leader. Nobody questions that Alphabet Google has the intellect to be a leader in any type of endeavor that AI is going to bring. And Alphabet really has a lot of assets and capabilities already. They have Gemini. If you haven't taken a look at Gemini, take a look. It really works well. I'm sure it has a few flaws, but in general, I've been using it for over a year, and it's been quite impressive to see what it can produce. They also have a robotaxi business in Waymo, and they've had it for 10 plus years. They've really been proving it out, and that business can really be exciting. So overall, this company is very valuable. It should be. It's worth $2 trillion, which is incredible. It's incredible that we have companies at $2 trillion value. And also we have one company above 3 trillion. So I'd like to take a look at Alphabet and value the company based on what I'm seeing in their financials with regards to free cash flow, what I'm seeing in their earnings per share, their growth rates on both, and seeing what I think the company is worth. I've been a proponent, a bull for Alphabet stock for a long time, especially as they were having their hiccups over the last 12 months. I've done a number of videos that really share that message or that intent for my portfolio. And I continue to buy Google stock through all the hiccups. I thought it was just a better discount that I was getting on this great company. It was good to see the stock really rise when earnings came out. It did about 11% pop on earnings, which was really nice, really gratifying to see this company do well. Now, as it is with any video that I create, none of what I share is investment advice, financial advice. I make no recommendation to buy or sell Google. I am only sharing my journey as an investor, and I am an investor in Alphabet. I own more than $100,000 of the stock. It's a big position in my portfolio, and I continue to buy shares. In my analysis, I'll go through and value the company and decide whether I should buy more shares, hold, or even sell some shares, if not all my shares of Google. And I'll share that with you. I'll share my analysis and my intent with this stock. Now let's take a look at the fundamentals of Alphabet, and then we'll look at my valuation of the company. The market cap of Alphabet is $2 trillion, $80 billion. Huge number. Incredible that they've gotten to that point of value. They are, looking at the trailing 12 months, a $318 billion revenue company. Just an amazing amount of revenue. Their net income is a whopping $82 billion. Wow, incredible. There are companies not even close to 82 billion in overall size, and Alphabet makes that amount of profit every year. The company has a forward PE of only 23.89. Think about that. The S&P is around that number, and the S&P includes many companies, high quality companies, medium quality, and frankly, some low quality companies. You could buy Alphabet, and I could buy Alphabet and buy it at 24 forward PE. To me, that's attractive. Let's keep looking to see what the other fundamentals look like. They're now going to pay a dividend, which is the first time they've ever paid a dividend, and they're going to pay a 0.48% dividend on their stock. They have many analysts covering Alphabet, and their price targets are a little low. The price targets are actually 7% lower on average than their current stock price. So I don't think that the analysts have updated their analysis and have updated what their price targets are yet, but it's good to see that most analysts have a buy rating on Alphabet. Year to date, the company's doing really well. The stock is up 20%. And over the past year, it's up 56%. So it's just been a winner. It's been a winner, but not to the extreme of like an Nvidia or a Meta. But I think that's good. That way the price is not too expensive, not too high. Alphabet's been growing their revenue really well. In 2023, they grew their business by 8.68%. In 2022, they grew their business by roughly 10%. In 2021, they just really grew because everybody was in lockdowns, and you can imagine how much search was going on. They grew 41% in 2021. Just an incredible rise of revenue. If you look at their current, trailing 12-month revenue, it's 318 billion, and that is double what they were in 2019. So in less than 5 years, they have doubled the company. Impressive. Overall, their profitability has been tracking with their growth. They become more profitable over time. And their cash flows have grown dynamically as well, keeping up with that revenue growth and making more free cash for the company. The company buys back shares in big quantities. That's just been a habit of Alphabet's year after year. The forecast, many analysts cover this stock. A total of 38 analysts have an opinion on this stock. And again, their average price is $155. I'm sure it's going to be updated quickly since they just had a great earnings report. And the high price target that is out there is $185, the low being $121. So it's good that so many analysts cover Alphabet, and I'm sure that those analysts are going to be improving their opinion of this great company. Earnings per share are really going to grow. In 2024, it's expected it's going to grow over 20%. In 2025, it's going to grow 15%. 2026, 14%. It just keeps growing. So that's the reason why this company is valued at $2 trillion. They have very high earnings per share at $7 per share, and it's expected that it's going to keep growing. I valued the company by looking at the free cash flows that I expect they're going to produce and discounting those free cash flows to today's value. I also valued the company looking at their earnings per share and determining what I think the company is worth based on the earnings per share that I expect they're going to make over the coming years. Looking at free cash flows first, they make a huge number of free cash flow, which is $73 billion of free cash flow. And that's going to grow in my forecast by 6% per year for the first 4 years. And then after year 4, they're going to grow by about 4%. Those are conservative numbers, but I want to be conservative. If I'm wrong to the upside, it just means the company did far better. So I'm going to be a little conservative. A discount rate, which is fairly low, 7.5%, because they have an exceptional balance sheet, much more cash than they do debt. This is a top 5 company in the world, period. And using that as a discount rate, I get an intrinsic value, a net present value of all the cash flows in the future of $2.072 trillion. They have over $108 billion of cash or cash equivalents on the balance sheet that I'm going to add to that intrinsic value. But I'm going to take away debt, which is $25 billion, which gives me an equity value of $2.155 trillion, which is higher than the current market cap of $2.070 trillion. So it offers up, if we look at cash flows, about a 4% discount on Alphabet stock. The earnings per share looks really good. $7.01 per share is the earnings per share expected in 2024. And everyone's very confident that they're going to make that number. I'm using a P of 36. I believe in this company, and for them to have a higher PE than the average S&P company, which is roughly 24, 25, is very rational for me. So I'm using 36 as a PE. I'm going to have a growth rate of 10%, growing the earnings per share by 10%, which is, again, conservative. They're expected to grow higher than that, but I'll go conservative. And based on those factors, I get a value per share of $277, but the company is being traded at $167 today. So it offers up a discount of 66%. Combined blended, I get a discount of 25%. I put more weight in the free cash flow method, and it yields a 25% discount on this high quality company. So should I buy more shares in Alphabet, hold my shares, or sell some shares of Alphabet? I'm going to make that decision by looking at 3 main areas. First, the company, then the balance sheet, and last is the discount on the stock. The company is excellent. I don't know that anybody would say something negative toward the overall value of this company. And this is a huge company. It always has a few items of controversy, but overall, it's just a very, very impressive business. So I love the business. They have huge competitive advantages, huge barriers of entry into their business, and they have really good prospects to grow in the future. So lots to like from a company perspective. Their management team's excellent. I know that they've been questioned and critiqued as they made a few AI blunders, but I think it's an exceptional management team, and I think they're set to really be successful going forward. So first, with regard to the company, it's a complete buy-in into the company from my part. The balance sheet's excellent. They have far more cash than they do debt. Every metric on the balance sheet just shows that this is a high quality balance sheet. So I'm completely bought in on the balance sheet. And they offer a 25% discount based on my forecast of free cash flows, my forecast of earnings per share for the company. And a 25% discount on an exceptional company of this type is really good. That said, I'm going to continue to buy shares in Alphabet on pullbacks and continue to add to this big position in this great company. There's only a handful of companies that are in the peer group of Alphabet. You could probably say that Amazon, Microsoft, Apple, Meta, Nvidia, those are the companies where you can put those in a peer group. Maybe even Berkshire Hathaway, Eli Lilly. But this is an exceptional company, and I like what Warren Buffett has to say about quality companies, which is it's fine to pay a reasonable price for a great company. Charlie Munger really made it a habit to buy quality companies, just invest in quality companies, and I completely agree. Alphabet provides access to a high quality company. And as a value investor, I like to track companies and wait for stock prices to fall. Alphabet, their stock price has fallen over the last 2 years, providing discounted prices on a great company. And that's what I'll continue to do is buy when everybody dislikes Alphabet and really increase my share count. So when the company reports a really positive report, like they just had with their earnings, I really see my investment appreciate quickly. I'll continue to do so with Alphabet and continue to have this as one of my big positions in my portfolio. I really appreciate you watching the video, and I hope you found it interesting.